Joining us now to talk tech stocks and what could be in store next year is Ray Wang. He is Constellation Research Principal Analyst, Founder, and Chairman. Hi, Ray.
Hey, Happy New Year's Eve.
Happy New Year's Eve. Thanks for getting up early with us. What happens next year? Do we see this continuation with these mega tech stocks?
We definitely do, but we have to look at this differently. So we're big on AI, but the question is, what are the AI derivatives? So what are the second order, third order derivatives of AI? And so the second order ones are looking at software companies that are taking advantage of AI because most customers can't build it on their own. They're going to want to consume it. So companies like Salesforce, Adobe, ServiceNow, NVIDIA, Palantir and Oracle are interesting because you're going to be looking at their services revenue much more than before. So, and the other piece that's going to be important is really a Mag 7 rotation. If you're afraid to get into all seven, well, then what you're going to do is move out of NVIDIA, Meta, Microsoft, and Apple and go into Amazon, Tesla, and Google and play that for the rest of the year.
Is that what you're advising?
Yes, definitely, if you're thinking about that. But I'm in all seven of the Mag 7, so that's a different game. But we're also looking at IPO markets, and that's going to be very interesting on the tech side. There are a lot of IPOs coming. You see it on the Databricks side. You see Discord, Klarna. You see Stripe, Chime on the fintech side. They're also going to be big there, so people are going to want to play that game as well going into 2025. The other thing to think about as well is the fact that M&As are going to be on the rise, and a lot of these AI companies are only going to be able to grow by acquiring more data sets, by acquiring more scale, and you're going to see the M&A game for possible acquisitions from the big players in AI.
Okay, so that's an interesting play too. If you get into M&A, look, you got to question whether some of these big tech companies are actually going to be able to get bigger because even though M&A is expected to rise, big tech may be facing some similar problems coming from a new Trump administration. Where would you focus when it comes to mergers and acquisitions? Where would you think there would be deals that could be done and maybe some room for some of these stocks to move up?
Well, there's an interesting thing that's going on. You're either at $1 trillion of market cap or you don't get to play at scale. And there are a couple companies that are sitting just about 500 billion. You see the Oracles and the Broadcoms, and they used to grow through acquisition. Maybe they're going to be more acquisitive. And then you see another group of tech companies that are sitting at 250 billion. And those are the names like ServiceNow and IBM and Adobe and Salesforce. It would be interesting to see if a banker puts together a play to bring some of this consolidation in the 250 billion market to go compete with the $1 trillion market cap players.
That's really interesting, especially when you mention some names that, like an IBM. You know, you think of them as being the big dominant tech from years ago. Now being at 250 billion makes them an acquisition target.
It could make them an acquisition target, and it depends what the antitrust climate is. But I wouldn't say necessarily that's where they want to go. But there are going to be a lot of companies that could potentially become acquisition targets in vertically integrated markets or to reach out to other areas. Broadcom, for example, has done that better than anyone else. They're known for chips, but they've done a really good job acquiring VMware to get a services revenue. And so companies that are in hardware that don't have services will go in that direction. Companies that are in software that want to get into another area may also make those types of acquisitions.
Ray, very quickly, AI spend has been the mantra. People are finding ways to spend money continually on AI. Will that happen if there's a downturn in the economy?
I think it's only going to accelerate because what we're seeing right now is exponential efficiency. If you're not 10x better or 1/10 the cost, you don't get to play in the market. I'll give you a great example in the financial services space. If you look at ACH transactions, $1.50. If you look at SWIFT, $25. In India, you're basically playing zero cents for peer-to-peer transactions in the government's UPI, which is their peer-to-peer network. If things like this continue, companies that think they have a moat are going to be dismantled. So the SaaS companies that used to disrupt the existing software companies are now too expensive for most companies. So for example, you could buy Salesforce at $400 per user per month, but you could also go to Zoho at $10. And that's the gap we're going to see going forward in the future, that exponential efficiency.